Hello again, everyone. It's Vince Four from TradeWinds.com, and this is our update for June 25th, 2017. Let's take a quick look at how the markets finished off last week. On Friday, we saw stocks closing mostly higher after a week that was pretty much dominated by sellers. We saw a nice orderly pullback throughout the week, but Friday, overall, for the most part, we saw a bounce. The Dow did finish lower by 2.5 points, but did manage to stay above that upsloping 20, while the S&P 500 gained almost 4 points. The Nasdaq did very nicely. It was up 28, and more importantly, it did close the week back above that 20 period moving average. So it looks a lot more likely that we are getting a move back to fresh all-time highs pretty much across the board, I would say, on any index you look at for U.S. equities. The Russell was up 10 points, a real nice bounce, again, bouncing off that upslope in 20. I think this not only gets to those highs, but potentially well beyond there. Bonds pulling back just about 6 cents on Friday, not a big deal, was lower and bounced, still looking very good, while gold had a fairly decent day as well, up over 8 points at the close, and crude did pretty well, pretty good as well here, closing in positive territory. Now, one thing to look at on gold, obviously we've had this recent sell-off. We still have some very significant momentum lower, which is not good. So in all likelihood, if we do get a bounce here, it'll be most likely into a level of support such as this right in here, such around, just above 45. And then we'll see a sell-off. But one thing to keep an eye on to try to gauge whether or not that will happen is the highs and lows from the June 21st candle. In other words, if you look at this, we have a multi-day inside bar formation on crude. We have 2 days completely within the high and low of that day. If we close above the high of the June 21st candle, then there's a very high likelihood of a pullback. If we close below the low here, then it's just going to be a continuation of this falling knife scenario that we've been watching here for a while. So keep an eye on that. Now, another thing to keep an eye on is Mr. Softie, Microsoft, MSFT. Looks like this one is headed back to these all-time highs near 73 and probably beyond there. It has been a real good performer throughout the year, just a nice, slow, steady grind higher. And on Friday, if we look at this, after this week's pullback, we not only had this hammer type candle, which wasn't exactly a hammer, I wouldn't call that a hammer, but we got to these lows in reverse, which was positive. But then on Friday, we put in this bullish engulfing setup. So you can see that the green body of Friday's candle completely engulfs the much smaller body of Thursday's candle. Any break above Friday's high would be considered a valid setup to the long side here. And I think at a minimum, we reach these highs near 73 and most likely beyond. Remember, another thing you can do is for upside targets, that is, when you're at all-time highs and you have no other previous pivot highs to target, you can take your fib extension tool, and let me just zoom out here for a second. Take your fib extension tool, take the most recent low and high here, and that will plot your targets. And you can see the 100% mark is that right around 73. Then we're talking about 74.5 and eventually 76.5 at the 1618 extension. All right. Also, news on tap this week. Fairly light week. Monday, durable goods orders. Tuesday, Red Book and consumer confidence numbers. Wednesday, MBA mortgage apps and pending home sales. Thursday, the GDP numbers, jobless claims, and money supply. And Friday, we have Chicago PMI, consumer confidence, and the Baker Hughes rig count. That's about it for now. Enjoy the rest of your day, and we will see you on our next update.